Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 206 today, 6th of April. And are we near all-time highs on the Nifty? We will discuss this and go through some chart analysis on the Nifty in this episode. But first, a look at the markets. So markets have been on a tear for the last many days, especially after the HDFC Bank merger news came out. And the next couple of days have actually been a sort of a correction or profit taking, if you may say, within that. PSU banks, however, continued to rally, up 1.9%, almost 2%. Public sector enterprise stocks have been rallying, likes of Power Grid, NTPC, etc. Again up 1.6%. Metal stocks still strong. Energy stocks very strong. Tata Power, Adani Power, all running up. JSW Energy. Commodity stocks, Vedanta, Hindalco, and sugar stocks also running, and some gains in infra. What was down was IT, minus 1.6%. Private banks, basically more or less in the correction space after a jump day before yesterday, minus 1.28%, and autos, pharma, real estate not really doing much today. So overall, a reasonably good day. However, Nifty closed down 0.83. The internals of the market were not so bad. Mid and small cap index up 0.4%, small cap index up 0.4%, Nifty next 50 almost up 0.4%. CNX 500 was down minus 0.4, CNX 200 minus 0.5%, and Nifty, as I said, minus 0.8. Some of the weekend investing strategies did quite well. MIMT All Cap, one of the star strategies for us in the last many years, it was up 1.7%. ATH was up 1.4%, and many others are between 0.5% and 1%. ATH2, MI35 were more in the 0.25% range. So overall, a reasonably good week. Last 1 week so far, last 1 week and 1 month look reasonably decent on all the strategies. So the question today is, are we at all-time highs on Nifty soon? So let's first take a look at some of the insights during the day which may support or be against this notion that we are going to new highs. So this is essentially a US Treasury 10-year bond yield, and as you can see, this is almost a 40-year chart, and there has been a huge sort of overhang of resistance beyond a certain point each year when the yield reached 8% in 93-94, or when it was near 7% here, or near 6% here, near 5% here. So it has been a declining top to the yield, and that has determined the easy policy from the Western central bankers. Now we are again at that moment of truth here, near 2.5% where we are, where if we break out of here, we will be breaking out of like a 40-year trend line, and the yield will go crazy above this if we were to go there. And with yields going crazy, you can imagine that there will be pressure, humongous pressure on the bond market, and hundreds of trillions of dollars sitting in bond market will feel that pinch. And of course, equity also in a higher yield environment may tend to not do so well, although in nominal terms they may continue to grow, but in real terms, as the yield goes up, the returns from equity, the real returns from equity also will get a bit decimated. So this is something that the entire world is watching right now, that where will this yield curve go on the US market, because everything else is linked to this mother market, and the bond markets are much more deeper than the equity markets in terms of size and the operation. So any disturbance in the bond market has rippled repercussions in every other market, whether it is forex, whether it is commodities, whether it is equity, etc. So on. So this is wait and watch. The Fed is also due to speak this week, so that is another sort of flag post for this week in terms of if there's any change in stance on this. Historically, like we have seen in the US markets, when there has been periods of high inflation, high yields, and high energy costs, equity markets have stagnated for long periods. This is like a 19-year period of stagnation for the Dow Jones Industrial Average, also including couple of crashes in the middle. So you never know how the equity markets will react to so much increase in yield. And although let's also qualify that India is still sitting pretty well compared to the rest of the world. Our yield curve is not looking as scary as the US market, and so far there are no red flags in terms of our country's situation, or our currency has not been edgy versus the dollar. So I think it is very clear that India is still much more comfortable than a lot of other places in the world today, but a disturbance in the mother market will have ripple effect everywhere. Second insight was on our NNF10 portfolio. So as you can see, since we went live, we got our second multi-bagger, so that was a flag goal post. But if you see the strategy on a longer term, there are several hundreds percentage gainers which were picked by the strategy, whether it was Bajaj or whether it was Adani's, so on and so forth, and the durations were reasonably limited. So within a very short period of time, these strategies, including all other strategies on momentum, are able to pick large winners when they do, and that actually causes the additional kick to the overall performance. So on Nifty all-time high, so this chart is plotting the Nifty index in the light green. It has the mid cap index in this orange, and it has the small cap index in this darker blue. So you can see here that Nifty is about 3% lower than its October highs. So we have been in a drawdown on the Nifty since October. So about 6 months have gone by in this kind of sideways correction, and usually corrections like these last between, let's say, 3-4 months to about a year and a half. Usually it is seen that market is not able to stay in correction more than this normally, and it will make attempts at new highs. So new high is very near. I mean, minus 3% is no major fall. It can happen in 2 days or a single day also. And so you need to understand that why all-time high is important. All-time high is important because at that point or above that point, there is no resistance. There has never been a trade above that certain point. So there is nobody stuck above that point, so as to say. Just like in all stocks also, if you have seen, as soon as the stock goes at its highest point, it has a different tone in its move. The momentum gets very strong. Why does that happen? Because there's nobody stuck at that point now. Only buyers and sellers, of course. Those who have bought below are selling happily with profit. So there's nobody sulking there, mera rate nahi aaya abhi tak. So everybody is in a happy situation. Sellers are happy, buyers are happy. So all-time high and above is actually a very different type of a zone. And that's primarily the reason our strategies do well also. That we are investing in a happy zone, so as to say. And there is nobody stuck there to pull you down. Yes, some stocks will go up and not do well, but then you get out of them and churn into other stocks, right? So that's why all-time high is very important. And you can see here the orange line on the mid caps is also down only 5%. So 5% is no big deal after the kind of runs we've had in the last couple of years. And small caps actually made a new high in January of this year, even after October. And from January, in the next 3 months, they are down about 9% from this high. So small cap index minus 9% is also no big deal. So overall, I would say from this relative standpoint, from all-time highs, the entire market is not doing bad at all. Given that a lot of other markets in the world have gone down much more lower. From that perspective, we are doing reasonably well, and our portfolios are also reasonably doing quite decently in this slide. So this is all that I had for today's daily bite. Thanks for watching. Please subscribe, please like it, please share it with your friends and family, and I'll see you in another video. Bye.